Let's get back to those bank earnings. I want to bring in our Chief Wall Street correspondent, Sridhar Natarajan. He joins us here at the desk. So, Sri, I was looking at the chart of Morgan Stanley trading revenue versus Goldman Sachs over the past couple of years, and they've been trying and trying and trying, and they finally overcame their biggest rival.
And that's important. And I know you don't hold much value to banks beating analyst estimates.
That's true.
But in this case, significantly beat estimates. Notched more than $4 billion in the quarter again, and were roughly $400 million ahead of Goldman Sachs. And that's important because in the last 2 or 3 years, Goldman Sachs has had a stranglehold on this business as the dominant player there. It was a crown that Morgan Stanley held for many of the years after the global financial crisis. And when they lost it, it did hurt inside Morgan Stanley, and it has been a sore point for CEO Ted Pick. So he will have a pep in his step with the numbers out today. But not just that. Investment banking fees up 44%. Great performance across advisory, debt capital markets, equity capital markets, and in their wealth and asset management business, the wealth management business that they love to call the ballast of their business, known for its stability. Revenue significantly higher. They pulled in roughly $80 billion in net new assets, which matches the target they've set, quarterly target that they need to meet to get that roughly $1 trillion in net new assets every 3 years. And pre-tax margin up to roughly 30%. It's something that Ted Pick had promised to analysts and investors when he became CEO. So hitting that mark and staying at that mark will be important.
What about Bank of America? They also came out, I heard Allison Williams on Bloomberg Radio this morning saying the net interest income beat. How key is that?
It is important for Bank of America for multiple reasons. One, the stock has been languishing all year. In fact, has been languishing since the Fed started hiking rates back in 2022. So it will be a big fillip for the bank to be able to beat expectations. Also remember that the thing that has been weighing down on this bank has been its held to maturity treasuries at low rates that has not been a big boon to its net interest income. As those securities start to roll off and they replace them with higher yielding securities, that will benefit NII, and Allison has said that will be a tailwind for the bank. When you match that with some strength in the investment banking business, that will be a big help for Bank of America. And I point this out also because at Citigroup, which is their closest rival, at least in the investment banking space, not JP Morgan or Goldman Sachs or Morgan Stanley, Citigroup had been making some good strides with their new banking head, getting ahead of Bank of America for much of this year, to now post a number in the third quarter where they're significantly ahead of Viz Raghavan's crew at Citigroup. That will make them happy out at B of A.